Well, the big slide in capital city house prices has a long way to go, according to forecaster Moody's, if we believe them. Melbourne is tipped to tumble another 11%, just ahead of Sydney on 9%. National prices will fall an average of 8% this year before a slow recovery next year, according to Moody's. But despite the gloom, lending to homeowners took a surprise jump in February, according to ABS, for the first time since last July. New lending to households was up by 2.6% to $32 billion, with lending to owner-occupiers 3.4% higher.
Okay, I think they got it partially wrong there. The household lending for February was indeed up, unlike the graphic here. Household lending 2.6% up, and owner-occupier was also up and not down 3.4%. But my comment before I show you more clips that can help you make up your mind as to where the housing is going is that I was talking to a family who live in Western Sydney, and they do the good old method of looking at the local paper, and the local paper is showing prices exactly the same, if not even higher. So one thing that everybody has to be kind of vigilant about is that the prices are quoted as to what the vendors are expecting, and most vendors, especially in the Western Sydney, may not be following the news and are not aware of this price pullback, and or they are hoping to be getting prices that they could up until June, July 2017 before it started going down. So these are the asking prices. It only counts, the price is the selling price. So unless they sell it for that price or close to it, the market and the figures are saying it's going down. But I got more clips for you, so stand by. Look, if you were watching news 2 years ago, 5 years ago, 10 years ago, 20 years ago, there's always warning bells about something. Someone's predicting that something can happen. Whatever was up is going to come down, and it eventually does, so that person or the organization like IMF ends up being correct, maybe off in timing. So there are warnings right now, but take a look at this anyway.
Well, the Reserve Bank has delivered a mixed report card on the economy, with more people in work but consumers much more cautious about spending. Deputy Governor Guy Debelle says despite the strong labour market, growth is weaker than expected. The market continues to bet the next interest rate move will be down. On his feet in Adelaide today, Mr Debelle said businesses outside of mining are continuing to invest. But in bad news, slowing house prices and sluggish wages means there's little upside ahead for economic growth.
But the main explanation, I think, as to why consumption growth has slowed has been the low growth in household income and an increasing expectation that it's going to stay low.
The Deputy Governor also sounded a warning on global trade tensions and the uncertainty from a slowing China.
But after more than 27 years without a recession, there's some big problems beneath the surface. Wages growth in the past 5 years has been the lowest since World War II.
Low wages growth has been happening for such a period of time that households now believe it's semi-permanent, and this is fundamentally altering the way households make their expenditure decisions.
And that's really what's put the brakes on consumer spending, particularly in the last 6 months.
Low wages growth and falling wealth as house prices tumble. What's shaping up as the biggest property bust in Australia's modern history sits alongside record household debt. Stagnating wages make it harder to pay off debt, but rising unemployment is the big risk.
So that's the major concern. If we see the labour market start to turn and momentum there go negative, then we'll get some knock-on impacts in terms of being able to repay your mortgage, and then the impact that has on consumer spending and growth. That's the main channel that I'm worried about.
A rising population's kept Australia out of recession, but economic growth is tepid, living standards are going backwards, inflation's too low, and as for productivity
growth very weak over the last 10 years since the financial crisis, and it is a major concern.
The biggest problem we think facing the economy in the long term is low productivity. So whoever forms the next government is going to have to enact measures that raise productivity amongst the workforce.
Because we can't rely on mining forever.
Commodity prices have been higher than expected, but that won't last, and we need to plan for the period beyond that.
Uncertainty about policy on climate change and energy has been deterring investment, and business wants clarity. Even the oil and gas industry says we need to put a price on carbon.
We really do need a national, consistent, coherent energy policy. And that energy policy needs to be consistent with something that encourages investment and also puts in place a transparent national, international price on carbon.
And there's certainly policy vacuums that can be filled by a government that's got strong direction and leadership. So let's hope that that's what we see after the election.
Indeed.
And as she was referring to the government, or the government after the election, which everyone expects to be Labor, she gives this body language. It's kind of funny.
By a government that's got strong direction and leadership. So let's hope that that's what we see after the election.
Indeed.
And just a quick point on climate change that, let's not forget, used to be called global warming. Somehow they rebranded it, and the carbon tax, which is, in my opinion, a complete swindle to control the population of the world. But that is a completely different, not just video, but a completely different channel. So you'd have to look it up yourself.
Uncertainty about policy on climate change and energy has been deterring investment, and business wants clarity. Even the oil and gas industry says we need to put a price on carbon.
Price on carbon, that's just unbelievable. I don't care what you believe, but that's just absolute garbage. Also, they touched on productivity, and really productivity has been very low in Australia. If it wasn't for the minerals, we wouldn't be such a lucky country. Otherwise, the productivity, if you look up the famous book by Adam Smith called Wealth of Nations, which is something that Martin Armstrong follows, which is why he's the only economist alive. And he's not just an economist, he's a trader. He's also a programmer, so he's got the two best skills that you can have if you would predict and forecast a future economic figures. So the observation throughout the history wasn't the wealth of nation that was determined by the minerals or any other kind of wealth that he had in the ground, but it was actually determined by how productive the overall population of that country was. I mean, a perfect example is Japan, who have no resources whatsoever, very little. They import everything, yet they are a wealthy enough country, and they were an empire for hundreds of years, and that needed to be very productive in what they were doing to be an empire and survive and be successful. Now, I'm not saying that this absolutely proves what I said in my previous video, that Labor in a government, if they win the next election, is going to mean property prices accelerating downwards, as well as the economy turning down, as well as the stock market, not because of it, but absolutely slowly, additionally accelerating the decline of these markets is more likely when Labor comes in. A few commenters said a few kind of different and slightly derogatory comments down on the previous video, but take a look at this.
Real estate agents are paying close attention to Labor's policies to water down negative gearing, and it's no surprise that they're not fans.
The market has already dropped a substantial amount, and I think if they do bring it in, and if they do win the next election, I think the market is going to continue to drop.
But it's dropping votes that's on the minds of Scott Morrison and Bill Shorten, and with small business accounting for millions of those votes, these are just some of the opinions they ignore at their peril.
And if you're not convinced what Labor government win or Labor win in the next upcoming elections is going to do to the stock market and the economy, and not entirely, obviously. If you're not convinced, I urge you to see this video. This is one of the channels I follow, Live Wire. It's very relevant to Australia. They interview Australian money managers. These are the chief investment officers and alike. Roger Montgomery here, Matthew Bulka. I urge you. The video is called Risks and Opportunities from a Labor Win, and in no uncertain terms, they spell it out what they think is going to happen, and for once they agree unanimously. With that, thanks for watching, and we'll speak again next time.